Good morning, folks. My name is Curtis Chandler, President of PFL. We hope that everyone had a great weekend, and we hope that you are enjoying our early morning briefing. We are live 7 a.m. Eastern every Monday. If you are viewing this podcast through our reports and are up at 7 a.m. Eastern on Mondays, please turn in next week live instead, and please follow us on LinkedIn. Pass on the good word. We would certainly appreciate it. And you could win a PFL Railcar. Our weekly quote this week is from Viktor Frankl. Viktor was an Austrian neurologist, psychiatrist, philosopher, author, and Holocaust survivor. He wrote an autobiography entitled Man's Search for Meaning, a best-selling book, and is based on his experience in various Nazi concentration camps. Viktor once said, "So live as if you were living already for the second time, and as if you had acted the first time as wrongly as you act now." It goes without saying we really like this one, folks. At the end of the day, there is little we can change no matter how hard we try. So why not make the same mistake a second time when we know the outcome and how to deal with it? Anyways, we are going a little deep here today. Hopefully we got the mind juices flowing this morning. Our IT guys really like this one. It's a little bit of a mind twister. The U.S. Jobs market recovery accelerated at a fast pace last week as fewer headed towards the unemployment lines. First-time claims for unemployment insurance totaled 547,000, well below the Dow Jones estimate of 603,000, a new low for COVID-19 pandemic era. Approximately 17.4 million Americans are still receiving benefits under various programs. The Dow sold off on Thursday of last week on a report that the Biden administration will propose higher capital gains on what it perceives to be wealthy Americans. Biden's plan is a capital gains tax to as high as 43.4% for some Americans and would hike the capital gains rate to 39.6% for those earning $1 million or more, up from 20% currently. The Dow did manage to close higher on Friday of last week. It was up 227.59 points, down 157.18 points week over week. The S&P closed higher on Friday of last week, up 45.9 points and down 5.3 points week over week. The Nasdaq closed higher on Friday of last week and was up 198.39 points, but down 35.53 points week over week. This week will be an extremely busy week in the markets with a third of the S&P 500 earnings reports. See PFL's Rail report for further details. In overnight trading, Dow futures are flat and expected to open up 6 points this morning. According to Bloomberg, India has been setting a record for daily corona cases and threatening demand of the third largest oil importer. The country's diesel and gasoline consumption could fall by a fifth this month, and traders said the nation's largest refinery has refrained from buying West African crude. WTI oil for June delivery did rise 71 cents to settle at $62.14 a barrel on Friday of last week, down $1.09 week over week. U.S. commercial crude inventories increased by 600,000 barrels last week and are 1% above the 5-year average for this time of year. Total motor gasoline inventories increased by 100,000 barrels last week and are 3% below the 5-year average for this time of year. Distillate fuel inventories decreased by 1.1 million barrels week over week and are 2% above the 5-year average for this time of year. And propane and propylene inventories decreased by 100,000 barrels last week and are still 18% below the 5-year average for this time of year. U.S. crude oil imports averaged 5.4 million barrels per day, week over week, down 448,000 barrels per day from the previous week. Over the past 4 weeks, crude oil imports averaged 5.9 million barrels a day, or 5% more than the same 4-week rolling average last year. Oil is lower in overnight trading, and WTI is poised to open at $61.25, down 89 cents per barrel from Friday's close. Total North American rail volumes were up 28% year over year in week 15, resulting in quarter-to-date volumes that are up 25.1 points year over year, and year-to-date volumes that are up 7.4% year over year. All of AAR's 11 major traffic categories posted year-over-year increases, with the largest increases coming from intermodal up 32.5% and motor vehicle and parts up a whopping 713.6 points. And coal was also up 23.7 points. North American rig count is down by 2 rigs week over week. The U.S. was down by 1 rig week over week. The U.S. currently has 438 active rigs. Canada's rig count was down by 1 rig week over week, but up 29 rigs year over year, and Canada's overall rig count is 55 active rigs. Year over year, we are up 2 rigs collectively. A few things that we are keeping our eye on. The Dakota Access Pipeline, DAPL. Oh boy, DAPL is running out of options. In last week's rail report, we gave the status of the battle that rages on for the shutdown of the 570,000 barrel per day pipeline that the Sioux Standing Rock tribe claims DAPL could threaten its water supply and wants the pipeline shut down. Here's the latest and greatest. Energy Transfer asked the U.S. Court of Appeals for the District of Columbia to rehear the case. They wanted the court to rehear the case and claimed that the Court of Appeals contradicted previous U.S. court decisions. Well, on Friday of last week, a 3-judge panel denied DAPL's request for an appeal. Energy Transfer was also asked by the court to update the court on potential economic impacts of a shutdown. Well, they did that last week. DAPL said that the shutdown of the pipeline would cause immediate economic shock, cost North Dakota oil producers up to $700 million a month, cause significant rail congestion, and the state of North Dakota could lose $1.1 to $2.5 billion in tax revenue this year alone. The Standing Rock tribe has until April 23rd to inform the court if they will respond. The state of North Dakota is now asking a federal court to allow it to intervene as a defendant in the Energy Transfer case. Keeping an eye on Enbridge Line 5. We gave our readers an update on that battle last week, which of course is another pressing rail event. As our readers and listeners know full well, the governor of Michigan, Governor Gretchen Whitmer, really wants this pipeline shut down. Here's the latest and greatest on that battle. In a victory for Enbridge on Wednesday of last week, the Michigan Public Service Commission determined that its review of the proposed 4-mile line tunnel under the Straits of Mackinac should not include an examination of the entire 641-mile pipeline. On Friday of last week, Enbridge and the state of Michigan met for mediation as ordered by the court. They agreed to meet yet again on April 28th and May 18th. Stay tuned for PFL for future developments. We'll report them as we see them. Petroleum by rail. The 4-week rolling average of petroleum carloads carried on 6 of the largest North American railroads fell to 23,819 from 24,330, a drop of 51 rail cars week over week. Please see PFL's rail report today where more detail is provided to the subject matters we touched on. We also discuss the new White House tax rollouts and how that will affect you, CP and CN's battle for the KCS, fresh Canadian crude oil basis numbers, and our commentary as to the outcome, and a terrible railcar cleaning accident that happened on Wednesday of last week. Well, that's all for this week's podcast, folks. We hope it was helpful, and we hope you have a great, safe week, and we will see you next Monday. PFL has been extremely active in railcar storage, return on lease strategies, subleasing, mobile repair, and mobile railcar cleaning. Please make sure to check out our just posted reports at PFLpetroleum.com. And if you have any questions whatsoever, want to troubleshoot any rail situation, please call us on the desk at 239-390-2885. Thank you, folks. Bye-bye.